Copy. Hello, Jennifer. It's been a while. Where have you been? Where have you been? Or have you just been quiet and not been able, not been talking in the group? Okay, I need this. I'll do. So my record of yesterday waiting on finally. Yeah, sorry, I had to I had a little kind of business meeting with someone about half an hour ago, so that's why I didn't start streaming early. But the market isn't really looking amazing, to be honest. I mean, I'm gonna look at the charts in a bit, but this week has been really quiet in terms of volatility. But I will get into that. Just forex trading. Morning, Wale. How are you doing? How's your trade going? You're still in the US dollar Swiss franc trade? Or are you out of it already? I'm gonna look at the charts in a bit, guys. I'm just trying to sort out a few things. This is that. Website. You got it. Well done. Well done. I know you made some profit on it because you did showed it to me yesterday. And you're looking at the pound yen. Yeah, I'm gonna look at the. I mean, I've got my chart on the pound yen currently. I'm gonna have a look at that. The market has been quiet this week, guys. You're not even gonna believe it. You're not gonna believe how quiet the market has been. But we're gonna do some analysis in a bit, guys. Just had a business meeting and having to send some details over to someone. Yes, so let's see what the market is doing, guys. Let's see if we're gonna have a trade today. What have we got here now? Have you seen them how the market is for the last couple of days? Monday, Tuesday. That's where the market has been. Nothing. The market doesn't if the market doesn't move, you can't make money in trading as a technical trader. Unless you're someone who scalps, and scalping is not a strategy that's going to be profitable for you, unfortunately. But yeah, hoping today we're going to get some volatility. Hi Pavan Kumar. Pavan, I remember you. You were in my stream last week. You asked a couple of good questions, didn't you? I think you did ask what was the reason behind one of the trades that I took last week. So yeah, I do remember you. How you doing? Nice to see you coming back to the group. Oh, trust me, I have a very good memory. That I tend to remember almost everything that I hear. So how you doing? How's your trading going? You have anything you want to ask before we go into? You're my follower from the harmonic pattern era. Oh wow, amazing. I mean, you should check out my Instagram then, because I've been posting a lot of harmonic patterns on Instagram. Every single one of my posts every day is on harmonic patterns. So you should definitely check that out. If you're interested in harmonic patterns, then you're gonna like what I've got there. Are you currently trading now? Are you only trading, or you only trading harmonic patterns? How is your trading going? Trading is super, but any reasons market are dull from 2 weeks? Trust me, I have no idea. You're absolutely right. I think the last couple of weeks in trading, usually Mondays and Tuesdays for the last 3 weeks have been completely dead, and there was no volatility. But it happens. This is what you need to understand about trading. It happens. Like sometimes you're gonna have. I mean, that's why the market consolidates. So the market is probably going through a consolidation period, and there's nothing you can do about that. You know. So yeah, I think that's just what the market is going through. So just be patient, and don't do anything rash, because the market will come out of the consolidation, and you are gonna have opportunities. And this is the time that usually people mistake for rushing into trades and trying to take trades that even the setups do not even permit you. You know. So don't do that. Just be patient, because the market is not gonna stay in consolidation forever. It's gonna come out and it's gonna give you good trading opportunities. Okay, so guys, I think we're gonna be ready to start. Amazing. So yeah, that's what you have to do. Just be patient. Trading, like, there's a lot of you're gonna get your reward for being patient in trading, guys. I mean, look at me, for example. Every single time that I'm coming here to stream for you guys, there's so many times where I have not taken a trade. I mean, the last couple of days I have not taken a single trade in forex, right here in front of you doing my stream. I mean, I didn't stream on Monday because it was bank holiday. But a lot of times I can come here. If the market doesn't give me a trade setup, I'm not gonna take a trade. You know. Just got off the Euro JPY short. Also, you took a short on that one. Amazing. Looks like this morning it was Okay, I see. Yeah, the market is doing some things that today is just ranging. I think, especially for the currency pairs that I'm trading. I think I did say this in my live stream yesterday that the fact that we've got the Bank of England coming up with the interest rate decisions tomorrow. I think there's always that chance, there's always that possibility that, especially the currency pairs that I'm trading, that they might not be volatile until then, until the news comes out tomorrow at 12:30. So that is probably what we're seeing right now. This lack of volatility. So let's see what the market is going to do today. If the market doesn't give us any volatility today, if it doesn't give me any volatility today, then there's going to be a huge move coming tomorrow in the forex market. A very, very huge move, like a big, big move once the interest rate decision comes out, because that's what happens when this market consolidates. When this market consolidates, and then you're just going to get one big move on Thursday. Could be in either direction. Could be in either direction. And pound New Zealand. And the pound New Zealand, this is a currency pair that I do trade. If this was to happen on my on the yen pairs, there's a strategy that I use to trade this called the extended runner. If this were to happen on my yen pairs, I would have taken a long position here at the end of the day on Monday. Because these patterns usually, this is how they behave. The moment you get the move on Monday, you might get a little consolidation on Tuesday, which we're getting right now. We might go back down to make another low, and then this is market is gonna be going up. So pound New Zealand dollar, you're gonna get a move to the upside on this currency pair very soon. But watch out, the market could break this low before we get that move first. It's a lot easier to predict this move if it were to happen on the pound yen. Just because of the strategies that I use, it's a lot easier to predict that move. But yeah. So yeah, there's going to be a lot of waiting. So hopefully, I mean, I've right now I don't really have much hope that I'm going to be taking any trades this week. Honestly, guys, I don't have much hope. It just depends on what happens tomorrow morning. If tomorrow morning I get any of my runner strategies, then I will be taking a trade. But at this moment in time, I just do not see anything. But so let's try and make this this live stream a bit more fun. I mean, yesterday I had someone in my live stream, Joshua, who has been very active on the charts, asking so many questions, which I like in a way, because you know, guys, I can talk about trading for hours and hours. I can talk about trading. So now that we're facing a time where I don't really have any trade to show you guys. If you do have any questions about trading, anything you want to know, any currency pair you want me to analyze, so yeah, just put it on the live chat. But because maybe we can look at some analysis on gold. There's a lot of people that do trade gold. A lot of people do trade gold. I think I looked at this yesterday, and I did tell you that you're potentially looking for a move down on gold. I do have Aussie dollar, New Zealand dollar. Yeah, I think this is from my this thing yesterday. But let me take those off, and let's look at this again. Can't remember the exact analysis I did on gold yesterday, but I'll try and look at the market again. I mean, we looked at this yesterday on gold, where we saw, and this is all about understanding structure, right? What do you have here? You have a bullish market where the market has consistently put in back-to-back bullish structures. And if you know about bullish markets, you know that the market needs to keep respecting the outside return. If the market respects the outside return, the market will keep going up. But when the market comes back down and breaks one of the outside return, that's always your signal, your sign that this market is about to change direction. Now, I'm looking at this on the 4-hour chart. But then obviously the market doesn't make things easy for you, and then it comes into a little bit of a channel contraction here. And these contractions, we know they always break to the upside. They always break to the upside. But once they break to the upside, this is not usually the signal to trade. This is usually the first sign that the market communicates to you. Because once the market breaks out of a channel contraction, it will come back down to the previous structure. This is all about structure, understanding structure before it goes up. However, we are at a stage where the market has already broken previous structure here, the previous outside return. So if the market comes back to this previous structure, you're probably going to see a little pullback before it continues down. Now we looked at this on a much higher time frame, and I told you that the fact that the market has already broken a major structure on a higher time frame, this might just be, so I might have to go on a daily chart to see this a lot clearer. Yeah, this might just be bullish structure, and the market could just be on the verge of making a pullback just to complete the next outside return on a much bigger time frame. And we know the rules of the outside return, right? We all know the rules of the outside return. The market has to come in between the 382 retracement and stay above the starting point. I think this is why I had a little zone here yesterday when I analyzed this currency pair. So we do see gold making a little retracement, but it's not going to be a retracement that's going to take gold completely down, because if you analyze gold on a bigger time frame, we can see that the market has broken this all-time high, this previous structure. It might be just a little break, but I keep telling people that the market doesn't do things mistakenly. The market knows what it's doing. This break is enough to tell the market that it's about to continue going up. But every time a market breaks a structure, you always get a reaction. Yeah, you always get a pullback. The market will make a little pullback. So we've broken that structure. Now we're potentially going to see a little pullback, maybe just to complete the rule of the outside return, and then we're going to potentially see the market keep going high. I mean, I've analyzed this gold maybe 2-3 weeks ago in one of my live streams, and I told you that gold is a long-term long. Even before we set this high, told you gold was a long-term long, because I looked at this structure right here, and I told you a structure like that. This is what the funny thing about trade. You can see, like, if you understand structure here, you can see so many, the way the market moves, it respects everything the market does. I mean, this is another example of the contraction that I talked to you about. We had a contraction here, and I said, with this kind of contraction, if the market breaks out of the contraction, obviously in this case you have to look at this structure here as well. You need to focus on this structure here as well. When the market breaks out of a contraction, if the break does not go above this structure, 9 times out of 10 the market will come back to retest the structure before it goes up. But then this is, like I said, this is still a corrective pattern here, and the fact that this does not break that structure there, this would have been a wonderful opportunity to go long on gold. For those people who understood structure, you would have taken this trade, and now you can just hold it, because this is just a minor pullback. Like I said, a pullback that will put us where the outside return is, just a minor pullback, and then the market will continue. Okay, so let's move on. Let's see if the market has done anything. No, we're not. Nothing really. Usually during the UK session, you do get extreme movements in the forex market, but not on this occasion. Not on this occasion. So, power comment, you said something about Australia, New Zealand dollar. So let's look at the Aussie dollar. Again, not a currency pair trade. But let's have a look at that for you. I mean, straight away, when you just look at this currency pair, the first thing I'm gonna see here is a little bit of structure, right? You do have some structure here, and you can see the market clearly respecting that structure. Now, on first glance, I will tell you that Aussie dollar is a short. That's on first glance. But if you're a trader, you don't take trades based on the first glance. You have to analyze the market a lot deeper to look at what the market is doing. But this one, clearly on a 4-hour chart, we can see we have a market comes into resistance, and it's likely going to go down. If you explore a little further, let's zoom in a little further. What did we see here? An impulse leg to the downside. What is this? A corrective pattern. And where does this corrective pattern usually breaks to? In the direction of the impulse leg. So you got a second reason why this is a shorting opportunity, right? Well, let's go further. You always have to keep it further. Don't ever. Is there a reason why this market is not going to give you a shorting opportunity? Could this market potentially keep going up from this side? What's the other reason to support that this market could go in the opposite direction? If I zoom in right here, actually, let me just go over to the 1-4 daily chart. If I go over to the daily chart here, for those of you who are familiar with, of those of you who trade head and shoulders, we have a reverse head and shoulders. So we've got one reason why the market could, give us a losing trade, why the market could start going up from there. That's one reason. So two reasons to take a shorting opportunity, one reason to go long. Yeah. Zoom in further. Can we find anything? What do you think the overall trend of the market is on a higher time frame? On a higher time frame, we can see we're clearly in a bearish trend, right? Because the market clearly hasn't broken this previous outside return. Starting point, initial structure low. Outside return, initial new structure low. Outside return, new structure low. Outside return. You see the pattern that the market is going? So you got two reasons why the market is two reasons each why you can take a short position or long position on this market. Can you find another reason? Yeah, exactly. So this is why sometimes people look at this and say they're neutral in terms of which direction the market is going to go. I'm trying to see if we do have any advanced pattern, any harmonic patterns on this one, but I don't see any. Maybe we do. Wrong tool. I need to get my Fibonacci retracement right. Swing low, swing high. Yeah, it looks like we do have another reason to go short on this market. Or did I say three reasons? Not this. So there's only one reason to go long and 4 reasons now to go short on this market. Let's recap again. Shorting, the reason to take a short position on this trade. Okay, structure point here, resistance here. The market is clearly respected it. Yeah? Higher time frame, the market is bearish on a higher time frame. We also have an impulse leg, a bearish impulse leg, which preceded a corrective pattern. So there's 3 reasons to go short. The only reason to go long is based on a reverse head and shoulders on a daily time frame. And we also have an advanced pattern here in the form of a Gartley pattern, which completed at the 127 Fibonacci next section, which is really at the entry point. So swing low, swing high, X to A leg, A to B, B to C, C to D, 127 extension. So we have a Gartley pattern continuation with the market is at the entry point. So if you were a trader, this is a trade that you will take. If you're a swing trader, this is a perfectly good trading opportunity that you take, because you have 4 different reasons why. This is how you build. Great to see so much activity. Love this channel. Thank you, Fing Book. So if you're a trader, this is how you do an analysis, guys. It's all about building a case for entry. You have to look at the market in both directions. You have to try and analyze what could go wrong and what could go right. build the cases for entry for both sides. Don't just have like a single-minded approach where you look at the market and you be like, okay, this is definitely a short-term opportunity. I'm going to be taking a short on this market based on just a few strategies or a few analysis that you've done. No, try to think like the other trader. What are the other traders going to do in this situation? Yeah. Like I said, a lot of traders will look at this and yeah, that's a very good resistance. Yeah, very good resistance, and you got a bearish Gartley pattern, plus the fact that the market is bearish on a higher time frame, plus the fact that you had a bearish impulse leg, which is now followed by a corrective pattern, and this corrective pattern is in the form of a consolidation. And you know, if you know advanced pattern, you know advanced pattern are more successful when you're trading them in consolidation, because even before we got to this bearish advanced pattern, we might have had another one here. Yeah, we'll have another. This was another Gartley pattern here, which I don't think you would have, been stopped out of that trade. But this is you guys who know me, know how I love my advanced patterns. If you had traded this, I don't think you would have been stopped at, because if you understand this structure, your stop loss will have to go below this structure. Even before we got to this point, we had, I can probably find about a lot of advanced pattern for you guys in this little consolidation, and show you the beauty of advanced pattern, because right here we have another one here, a butterfly pattern. Okay, the butterfly pattern here that ended up being a winning pattern. So two advanced pattern, and the third one that we're currently forming right now. That's it, guys. That's how you kind of, analysis is the most important thing. I keep telling this. I think every single time on my live stream, I always stress the fact that get your analysis right. It's the most important thing. Don't worry about placing a trade, because that's, you can teach a 2-year-old to click a button to place a trade. Analysis is the most important thing. Spend as much time as possible. If you don't know how to analyze, try to understand structure. Learn, seek some knowledge, and understand how to read market structures. Because that is going to help you a lot, guys. That is going to help you a lot, because there's always you have to remember that, whatever direction you're predicting the market to go in, there's always another trader who's predicting the market to go in the opposite direction. There's never like 100% of people that are long on a particular currency or short on a particular currency. There's always like opposing sides. So you have to always think like the opposing trader. Think like, why is this trader taking a short position? Why is this trader going that? Why? What did he see that I'm not seeing? And then look at your reasons. Analyze the market. If you have a lot more reasons to go, like, I wouldn't be attempting to go long on this market. So let's see if we can analyze something else. Let's go over to, what is one thing that people like to trade? Should we look at crypto, or should we look at the euro dollar? Even the S&P, the US indices, there are people that trade that, don't you? So let's look at the S&P. Since you guys are not gonna suggest something to look at on the group chat, I'll just pick anything random to look at. Can we take a look at EA? Do you mean Euro Aussie dollar? Euro Aussie. Okay, cool. Yes, of course we can take a look at that. This is a currency that I do trade. Let me just, Euro Aussie on the daily chart. We've recently broken structure, and by that I mean this structure over there, and also this one over there. The market has broken two clear structural areas on the chart. So based on this information alone, the first reason that I have is that I will be looking at going long on this market. That's the first reason, because of the fact the market broke in structure. But then obviously, if you understand structure, if you think back to your knowledge of structure, every time a market breaks a particular structure, the market doesn't really go, the market retraces, the market gives you a reaction. And that's what we're seeing right now here. We're seeing a reaction. So the next thing you need to ask yourself is, where is this reaction likely to terminate? Because you've already established the fact that you're going to go long based on the fact that the market has broken these two structures. So now you have to ask yourself, where are you going to start taking long positions? So focus on what the market has done currently. Looks like we put in a bullish structure right here, right? Did we get to the 382 Fibonacci retracement? Yes, we did. So the market has put in a bullish structure here. And your knowledge of bullish structure tells you that if the market is to stay bullish, if the market is to remain bullish, it cannot go beyond the previous outside return. So the market cannot go below this level. But also, it needs to come into the 382 Fibonacci retracement. We're currently at the 382 Fibonacci retracement. So Euro Aussie should be expecting a reversal from now up until anywhere within this zone, because it's already at a 382 retracement. The market could reverse here and keep going up. It can do that. But as a trader, if you were to take a long position right here, your stop loss will have to be below the previous outside return. Right? And your stop loss, probably you have to go to the 127 Fibonacci extension. Assuming the market retraces from there, gonna have to go to around 127, 141 Fibonacci extension. Now, if you were to take a trade like this, you have a risk to reward ratio of 1 to 1. Or you can be a little bit smarter and say, okay, so we have a structure level there. This is probably going to be the best opportunity to take a trade if the market comes back a little bit to this level. Then you take a short opportunity. That's going to improve your risk to reward ratio a tiny bit, not by much, 1.5 to 1, which is decent enough. You always need to try and aim for a positive risk to reward ratio on any of your trades, because if you're trading the normal generic strategies that everybody trades, you need to try and have a positive risk to reward ratio, because those strategies will only win you about 50 to 60% of the time. So only if you have a positive risk to reward ratio can you be profitable trading those kind of strategies. So that's Euro Aussie for you. I don't know if we have anything more on the higher time frame to check. Or is there a reason why you will take a, because I mean the general trend of the market is still up. We're still bullish. So a bullish trend. The market recently came out of a, because this is a bullish market here until the market broke that structure. Is there a reason why anyone would short this market though? That's the question. The only reason that you would go short on this market is simply because of the fact that breaking this structure, the market will retrace. And that's the retracement we're getting right here. But that retracement is likely not gonna last long, simply because we've come into the reversal zone based on a bullish structure. You're welcome, Wale. You're welcome. So let's move on. Let's see if we can analyze something else. What about the S&P? I know so a lot of people do trade the S&Ps, no? The US indices, US Dow Jones, S&P, and all of that. Let's look at Dow Jones. It's not something that I've analyzed this. I've done a lot of research on this Dow Jones. As you can see, my boxes. For those of you guys who are familiar with my teaching, or my students, they, when they see these boxes, they know what the boxes means. But I've done a lot of analysis on this, so I'm not gonna completely find a different Dow Jones to look at. Let's look at that one there. Oh, every single time I look at the structure in the market and I see the market behaving the way it should, which is obviously that's what the market usually does. It's a thing of beauty if you understand this, guys. Because if you look at this, what happens here, a lot of people might look at these and think that this is all kind of random. But this is not random by any stretch. By any stretch of imagination, if you understand structure, this is not random at all. You know, can just follow this market here. Can start from the top right there, impulse leg, initial structure low, outside return, new structure low, outside return, new structure low, outside return, new structure low, outside return. What does this outside return? What did it do? Broke the previous structure. First sign of communication. When the market breaks the structure, it retraces. Now what we're seeing on the Aussie, the Euro Aussie that I just analyzed is something similar. But however, on the Euro Aussie, you don't have a bullish structure behind it to tell you where that is likely to terminate. Here, what you have is a nice channel contraction, and you know with channel contraction, the market when it breaks, it goes all the way back to the previous structure. I can show you 3-4 examples of this, and you see the way they behave. Coming back to the structure, this would have been the place where you would have taken your long position. And off we go, right? Off you go. The market is currently putting in a corrective pattern here. But once this is done, we're heading up. It's not rocket science. Like trading, only when you understand structure, guys, it's not really that difficult to understand structure. Yeah, so there's definitely going to be trading today because I don't have any trading opportunities of any of my trading pairs. So we're just going through some analysis, and so next one I'm gonna pick Bitcoin because I know there's some people that do trade cryptocurrencies. What's been happening with Bitcoin? Let's have a look at that daily chart. Now Bitcoin, straight away, if you understand structure, bullish structure, right? Starting point, outside return. The market is on the verge of forming another outside return, bringing your Fibonacci retracement. Yeah, swing low to swing high. Look at that 382 retracement and create your zone. This is our zone that this market needs to come back into, and that's where you're going to be looking for your long opportunities. Now we've got a little bit of structure here that the market could come back into the structure. You could get a reversal there. So Bitcoin, yeah, we have a potential, but if you zoom in, then the whole story changes. Now you have one reason to go long on Bitcoin. Let me show you how it is that you can decide what to do on any particular currency pair. This is one reason to go long on Bitcoin, because you have a bullish structure, right? But if we look at this market and you zoom in, you're going to see that you had a bullish structure here. Remember, any break, no matter how little it is, it's still a break that counts. You have a bullish structure there. So you would have expected the market to not break the previous outside return, but the market has broken that outside return. And when the market breaks the structure, it retraces a little bit, and this is what you're seeing right now. Now this retracement at some point is going to head down. So one reason to go short, another reason to go long. but the overall trend of this market is still long. So guys, analysis is very, very important. Just learn how to analyze the market better. But yeah, so today there's not going to be trading, and I'm going to try, and I will be ending this stream, guys, in about 20 minutes. I think an hour of stream and going through some analysis, and hopefully you guys have been able to learn a few things, because that's the most important thing. So but yeah, so we'll just have to wait and see until tomorrow if we're gonna have a trading opportunity or not. I think the market is waiting for that interest rate decision, especially for the pound pairs. But to be honest with you, across every single currency pair, I haven't seen any volatility. So this could be one of those weeks where I'm not gonna take any trade. It happens. It's better to have a break-even week, or a week where you don't do anything, than a week where you go against your plan, or you go against your strategy, you panic, you try to look for trades, and you end up with a losing trade or a losing week. Yeah, so I will be ending this stream soon, guys, unless you have any questions that you wanna ask, and or any currency pair you want me to analyze. No questions or nothing from you guys? All right then. So gonna be ending the session then, and we're gonna be back tomorrow. Tomorrow morning, definitely I'll be back. US 30. I just analyzed through US 30, Abraham. I just looked at it. Maybe I haven't looked at the what's it called, in terms of like lower time frame. I haven't looked at that, but I've just looked at the US 30 on a higher time frame. The first thing I'm going to tell you is that this market is bullish enough on a higher time frame, and the market has recently, if you understand structure, you had a break of structure here, a contractive pattern here, and usually this market, once they break out of the country, it will always come back down to the previous structure low. Now we had this huge impulse leg and the market is correcting. Now expect another move to the upside. At some point this market will break to the upside. And in terms of looking at this market on a much lower time frame. Oh, look again, guys, we have another contraction. But let me show you how this contraction is going to behave now. Because we have another contraction here, right? And the market broke out of that contraction. But notice where that market ended up, above that previous structure. So that tells you that if the market, now that the market has come back down up to the previous structure, this is a retracement. We're going to go down. But we're still going to be in that. So if I look at the 4-hour chart, this down move is still going to be in part of this bigger corrective pattern. So the short-term trade on the US 30 Dow Jones is a short trade. That's the short-term trade that you're going to get. But long-term, this market is bullish. On a higher time frame, the market is bullish. So do not forget that. If we ever have a situation where this kind of no, it's fine, Abraham. Maybe you just tune into the live stream, that's why. It's absolutely fine. But I didn't analyze it on a lower time frame. So now I've looked at it on a lower time frame, and you do have a shorting opportunity on this market. I mean, we've come into the 618 Fibonacci. Yeah, we've come into the 618 Fibonacci retracement. So yeah, we are gonna see a shorting opportunity on this one. Yeah, so US 30 is a short, and yeah, everything else, it's just not moving. Look at that, there's just no volatility whatsoever in the market. Monday, Tuesday, completely dead. But I'm telling you guys, this is one of those times if you understand how the market moves. If we don't get any volatility today, then we have a really big move coming, and that big move on this currency pair. Let's see, what are we? Where's Monday? This currency pair will give you a huge move to the downside, likely coming tomorrow. I keep an eye on that. Usually when the market does this, the market kind of doesn't give you any volatility in the first 3 days of the week. You're going to get this move coming on Thursday or Friday. But I think this Thursday we're going to get this move to the downside on the US 30. So pay attention to it and keep an eye on it. You don't have to trade it, but just keep an eye on it. And we're going to reconvene when we come back here I mean, I'm not going to stream on Friday, but I'm going to stream tomorrow. So if we get it tomorrow, then we're going to talk about it. But other than that, like I said, if you guys don't have any more questions, I will be ending the stream today. There's no trade today for me, unfortunately. Like I said, the market has been dead, really, the last 2 days. Monday was bank holiday. That was understandable. Yesterday, yeah, it was kind of understandable. The market could be. But on a Wednesday, I expected the market to be very volatile on a Wednesday. But it doesn't look like that's going to be the case. So, yeah. But I'm glad you guys have been quite active today on the chart. You know, you've given me a lot of work to do. So that's why I've been talking. And yeah, so if you have any more currency pair you want me to analyze, then do suggest it in the live chat. If not, I will be ending this stream in a few minutes time, because I've got a lesson at 11, so I need to go and have some breakfast and get ready for my lesson. Ugh. Any more questions, guys? No more questions? Okay, in that case, I'm gonna end the stream here, and we'll be back tomorrow, UK session, unless if I have other engagements in the morning, but I'll try and stream in the UK session tomorrow for you guys. So yeah, for anyone that tuned in today, thank you so much, and thank you guys for all your questions, and hopefully I'll see you guys tomorrow.